Let's bring in Krish Sankar. He's Cowen Senior Research Analyst. Krish, it's good to talk to you today. Software Developers Conference, not necessarily a big catalyst for Apple, but what specifically are you going to be looking for as we count down to this event kickoff?
Hi, thanks for having me. And you're absolutely right. This has typically not been a huge catalyst. A year ago, people were excited into it purely because of the fact that that was when Apple actually introduced the M1 custom silicon chip. That was kind of a big deal for Apple and the ecosystem. Now we are obviously heading into WWDC with the overhang of the lawsuits, which have been there for a while, but just taken a more prominent position. I would say at this point, what is probably more interesting to watch is anything you're going to talk in terms of new product release, like you had mentioned, the speculation of new MacBook, etc. There's also some speculation they might probably do something, especially on the 3D map side, VR, AR capabilities, talking about those. I think those will be pretty interesting. But from a big picture standpoint, I would say no investor expects anything material to happen during the developer conference because it's more geared towards talking about the ecosystem and how to benefit the developers.
So I mean, when it comes to that ecosystem, we've talked about some of the weakness areas for Apple. Not sure which one seems the shakiest when you dig into the numbers there, but we have been talking a lot about Apple TV Plus and the way that they seem to be falling behind when it comes to the other competitors in that space. I mean, what stands out to you as maybe the thing that they're going to have to put some shine on the most?
Yeah, you're right. I think the TV Plus has definitely not been as aggressive as people thought it would have been. But keep in mind, when the TV Plus was introduced sometime in 2019, people had these big hopes that they're going to do a lot of original content. They might have to build out a library. I think what has really changed is that Apple is really focused on building out the original content. But keep in mind, because of COVID, original content production took a backseat, right? It was very hard to actually film new episodes last year because of social distancing and COVID protocols. So I think effectively what that meant was expectations on Apple TV Plus effectively got pushed out. And unlike a Disney Plus or a Netflix, etc., they didn't have an existing repository or a huge library. So I think that's why the original content production is very key for Apple. So I think on that relative basis, you're right. TV Plus has probably not met the goalposts that Apple or even investors envisioned 2 years ago. But the beauty of Apple to me is that the services is not a single line item. The services consist of TV Plus, Apple Pay, App Store, the tag, the licensing. It's a multifaceted line item. So I think to me, even if one of them falters behind, there are enough levers to pull for the collective to move forward.
Krish, on the issue of Apple's relationship with its developers, I mean, Dan sort of highlighted the challenges the company has been facing, especially on the back of that trial with Epic Games. We've heard Tim Cook, at least publicly, double down on the rules they have in place, saying, look, it's all about privacy and really maintaining the order within the App Store. Behind the scenes, you think this has prompted some conversation about a change in rules? And are we likely to see him or hear him address this issue today?
I would say that's an extremely difficult question to answer because I would say it's a combination of a few things. Number one is obviously the backlash Apple has seen from some of their developers. Number two is the fact that, companies like Epic are actually trying to force a change while Apple is still sticking with its privacy policy. And then the third part is obviously the legal outcome, the very fact that it's going to have a legal issue, and therefore it's kind of very hard to handicap. What I would probably say is that I think from a very, very high level, what Apple has been very consistent the last few years, what Tim has been talking about is the privacy angle. And I feel like they're going to stick to that because that seems to be one of their biggest unique selling proposition, whether it comes to developers or even to their customers and suppliers. So to me, that is still going to be the overarching theme. It's going to be all about privacy, and then everything else kind of falls in line within those boundary conditions. But just trying to speculate what he's going to say specifically or what the outcomes are going to be, I feel like is extremely difficult.
Yeah, the other extremely difficult thing here would be to step back and think about the way that some of these growth stocks or tech names had been beaten down. You got to put it in the context of kind of the market dynamics you're also seeing here. Talk to me about the Apple price target you have when you look at some of the stuff that's maybe not priced in yet, but also factoring in just kind of the growth and mix that we've seen around some of these market jitters, where you see Apple going?
Yeah, absolutely. I think you kind of hit the nail on the head. Growth stocks have taken a back seat. Last year was a strong year for growth names. And this year, what you're seeing is kind of like more of rotation into cyclicals and value. And I think a case in point is, forget the last month. If you take the first 5 months of the year, if you look at the outperformance of an Apple relative to Hewlett Packard, HP can see HP is like they outperformed, and Apple is actually year to date is actually underperformed. It's actually down 4 to 5%. So I think there's definitely a part of that whole trade that went on. That was definitely a headwind for a name like Apple. Looking ahead, I think there are two things to keep in mind, right? There is some concern in terms of iPhone units. We haven't seen any. I think we feel good about our numbers, but there are some investor concerns that proliferation of COVID in Southeast Asia and India could actually have a modest impact on demand. The second one I would also say is that on the services side, the biggest issue this year has been not the actual number in services, but the very fact that investors are just worried about the losses. So it's kind of been an overhang on the stock. So you could probably argue that that overhang reflects on the multiple of the stock. Another way to think about it is like, over this year and next year, the estimates are somewhere around like a $5.15 to $5.30. If you just want to simplify it and say, call it a $5 number, if you put a 30 multiple, it's a $150 stock. It's like a 20% upside from where the stock is today. To get to like a 175, 180 kind of a price target, you need to have slightly higher multiple. And I do think you can get there over time. The only thing that is probably going to be the biggest delta between now and then is getting some clarity on the legal outcome. So I think in a way, the Epic lawsuit, how it actually transforms and the outcomes shapes up are incremental data points that will be important in understanding how investors are going to either give a higher multiple or lower multiple in the name.
Yeah, a lot of variables there that could lead to potential catalysts on this stock. Krish Sankar, Cowen Senior Research Analyst. It's good to talk to you today.